I would like you first to speak to the performance of the sector in this reporting period.
Okay. The brewing sector has performed poorly over the last few quarters, and that's due to the increasing contest for market share in that sector. Like if you recall, since the introduction of IB into the market, international breweries coming into the market, we've been seeing increased competition for volumes in that space. So, and the two biggest players, that's Nigerian breweries and Guinness, because most of them play in the premium segment of the market. So we've been seeing them lose volume share to IB, which plays at the low end of the market. So to that end, we've been seeing weak earnings performance, for the two biggest players, that's MB and Guinness, going into the sector, and that's largely reflected in the share price of both stocks. Over 2018, the two stocks, and that's MB and Guinness, both reported negative yearly return. Investors are worried on core earnings performance and their inability to compete favorably in that space.
Yeah, okay, interesting. But I think the operating environment was also an issue for them as well. And then can you also speak to the demand especially for the festive period in Nigeria?
Okay, typically Q4, that's usually the strongest quarter for brewery producers, and we saw that in the numbers in both Nigerian breweries and Guinness's numbers. Q4 performance was actually the strongest for them. That's due to the festive activities, and like you said, also the weakening consumer wallet also played a role in also driving weaker beer volumes for both players. Since 2016, since we slipped into recession in 2016, so what we've seen is consumer downtrading as against higher demand for premium beer products. We've seen consumer just tilt their demand towards cheaper beer. And for IB that plays in that segment of the market, their trophy and hero bands are doing very well in terms of demand. And while for MB, whose portfolio mix is tilted towards the premium segment of the market, we've been seeing single-digit and sometimes even double-digit decline in volume. So the weak consumer wallet has played a huge role as well in the weak performance we see in that sector. All
right, let's look only at the Nigerian breweries right now. So read some comments from someone from there who's talking about the fact that excise duties also affected their performance in this quarter as well.
Yeah, very true. In June 2018, government introduced the new excise duty regime, which will be largely tied to volumes as against a flat charge on COGS. And that added additional layer of pressure for sector players in that industry. And in terms of response, we saw Nigerian breweries and Guinness, raise prices. But MB, international breweries, did not do that. So the price hike we saw from both players didn't last. So because international breweries didn't take in the price increases, MB and Guinness had to reverse the price increase we saw earlier in the year. So that added an additional layer of pressure to earnings for them. So that was why we saw the weak margins for both players. But in terms of our coverage universe, that's MB and Guinness, we think MB is actually, in terms of performance, MB is at the receiving end. Over 2018 alone, in terms of margin, their margin dipped about 250 basis points, while for Guinness, our expectation is that margins will only dip 30 basis points. And for Guinness, the support for them is coming from their spirit segment, the spirit segment of their portfolio. At the end of 2018, spirit contribution to revenue was about 15%. But what we've seen is, in order to protect margins and revenue, so MB had been pushing their spirit product into the market. And in the half-year result that was just released, spirit contribution to revenue was about 18%. And management guided to the fact that in the medium term, they are looking to push that to about 30%. So for them, the spirit segment of their portfolio has been providing support.
But looking at the segment still, what about the performance of the non-alcoholic segments?
Here, the non-alcoholic segment for Nigerian breweries, for Guinness specifically, also supported earnings for them. The press, we visited their plant not too long ago, and management guided to the fact that what supported earnings, the mild reduction we saw, mild plunge we saw in revenue was actually due to increased contribution from the non-alcoholic product and spirit as well. But for us, we think bulk of that support came from the spirit segment of the market.
Okay. Yeah. Okay, but looking at the market, we saw the barley prices were up around 11% as well. By how much did that impact the cost of sales?
Yeah, it did. Barley prices on a year-on-year basis are up 11%. And as we all know, most brewery players actually import barley from the international space. So that added toll on COGS for them. But also, another pressure from COGS was also the fact that loss of these economies of scale. So what we see is because most of these players are losing volume share, that's in terms of their lager business. So the economies of scale they enjoyed before from producing higher volumes, higher beer volumes, most of them are not enjoying that same economies of scale. So in terms of COGS as well, in addition to higher barley prices, we also saw cost pressures also coming from loss of economies of scale as well. Okay,
would you say they are performing at optimum efficiency?
Yeah, for MB and Guinness, they are close to. They are close to their full capacity. But for IB, we know IB just introduced a new plant in Shagam, and that even explains why they've not been able to increase prices, because they're trying to push volumes in order to reduce their per unit cost on their production from that particular plant. So it's a different play for different players in the industry.